not, maybe you attended our last one where we had Tesla. We talked about Tesla, I guess I should say. ExxonMobil was before that. Anyways, want to get a feel for when's the last time. You'll notice it's only giving you about 20 seconds to kind of get that, to confirm your vote. So make sure you vote quickly as we get going. We'll get a feel for who's on the program with us today. Again, it's taken just a moment for it to calculate. We got a number of us on. Thank you for coming. I want to go ahead and share the results here so everybody can see that. It looks like as we're looking at these results that, yes, it's the first time, about 42% of you. A number of you have come back, so welcome. Glad to have you back again. I appreciate your attendance here. The next question I've got is, how many of you have participated in an Acumen learning program? I'm going to open that poll. Yes, I've attended a program. Yes, I did not. I did attend a session earlier this year. No, I've never attended a session, etc. Get a feel for when's the last time. A number of you have, some of you have not. Now make sure you hit submit, otherwise it won't calculate your selection. So take a moment to do that. This just gets us to feel who has been in one of our programs before, because you might help me as we do some review of some concepts today. No worries if you've never been to a program. I'm glad you've come. This is a great opportunity. Like I said before, I can't think of a better time to be focusing on your personal development around how to listen to an earnings call and be comfortable with what you're hearing either from your company. Maybe it's from you're in a sales role looking at your customers, or maybe it's just as you look at just an interest in a business. What a great time. We're right in the heart of earnings call season right now. So this is a great time to look at that. So it looks like, boy, a number of you have participated, and about 27% have never attended. So I'm glad you're here today to be a part of our program. Well, the second thing that we're going to be using is the chat box. So make sure that's open. Ginger invited you to open that. If you want to open that chat box, make sure you open that. And here's my question. I want you to just get comfortable using it. First of all, make sure it's set to send to everyone. That should be in your chat box. If it isn't, make sure you click on the drop-down menu and get it selected on everyone. And here's my question as we get going today. My question is this. Where are you calling in from? You can put a city, you can put a state, you can put a country. Just put it in the chat box. Let's see who's comfortable using that. Where are you calling in from? Ginger and I are calling in from just south of Salt Lake City, Utah. You may remember in 2002, we had a wonderful chance to host the world for the Winter Olympics. So that's kind of our claim to fame. Boy, we got people from all over the world. I saw Korea, I saw Ukraine. Well, wonderful. So again, it truly is good morning, good afternoon, and good evening, depending upon where you're calling in from. Well, folks, I think we've got the tools ready to go. So I want to jump right in. We got a lot to cover in the time that we have remaining. So let me start by doing one more polling question. And the polling question is, when was the last time you listened to an earnings call? So that's my polling question. I'm going to open that up. Now, it could be your own call. Maybe you're part of a publicly traded company. And maybe you've looked at a competitor's, maybe a customer, or maybe you just have an interest in this. If it's something you've done this year, select that last year. It's been a while. It's never, or boy, Brent, I'd rather go to the dentist. Looks like we missed a knee on that. But yeah, I'd rather go to the dentist than to do that. You'll notice these goes fairly quickly. You get a short time. Make sure you hit submit so we can kind of see, your answer. That's how it gets calculated. But again, when's the last time you listened to an earnings call? If you didn't get a chance to answer, go ahead and put it in the chat box. Some of you are doing that. It's been about 6 months, Paul said. Excellent. Ginger, if you can help us with the question that Mariah has, is there a number to call in for this WebEx? Well, here's the polling results. So as far as listening to calls, about 39% have listened to a call this year. Last year, about 4%. It's been a while, 9%. But boy, there's 13% have never, or 1% is saying, I'd rather go to the dentist than listen to the earnings call. Well, hey, no worries. Wherever you're at as far as your participation in earnings call, my hope is to give you some interest or spark some interest around listening. Because as I said, I can't think of a better time to be kind of focused on this. What's interesting, though, is people listen to these calls. There's some statistics that are kind of interesting to me. Number one is this, that about 95% of employees do not understand their company's strategy. Think about that, 95%. This comes from research done by in Harvard Business Review, where they looked at publicly traded companies and how effective are they? How much information do they know about the core strategy of the company? Well, here's another stat that may surprise you, but about 90% of employees don't understand these key metrics and measures. So as executives are talking about stuff like free cash flow, return on invested capital, talking about the stock price and why it's going up or down, a lot of times we don't know what's going on. We can't really conceptualize what's going on. Well, imagine you're the CEO of a large multi-billion-dollar company, and this month we're looking at Amazon. So imagine you're Jeff Bezos. And just here's some stats around Jeff and his company. Over 1 million employees, guys. Over 1 million part-time, full-time, or partner employees. Over 40 subsidiaries that you're working with, right? You got 18 storefronts in 18 countries, 2.5 million sellers. You've just gone through a pandemic where you're dealing with the pandemic with your own employees. 1 million employees, trying to keep them safe, make sure they're not getting sick, etc. But on top of that, your demand, the interest around your products or services is skyrocketing. All of a sudden, you got to figure out a new way to do it to kind of meet this demand. And really, your employee. Now, imagine those previous two statistics. 95% of employees don't understand what your strategy is. 90% don't understand the key metrics. Well, what is it? The title of our program today is what is it the CEO needs you to know? So as an employee, what does Jeff Bezos need his employees to know? What is it that he needs his customers to know? As we think about, all of us, many of us are customers of theirs, right? And how many of us notice the deliveries haven't been as on time as they once were during the pandemic? I remember ordering and thinking it was going to be in 2 days, and they actually had to postpone it. It took 4 or 5 days. I got used to 2 days, and all of a sudden I'm saying, hey, what's going on, etc. What is it that he needs his shareholders to know? And finally, a significant portion of his business, he has partners that are selling on behalf of Amazon. What is it he needs partners to understand? Well, folks, that's what we're here today. I want to walk you through a simple process. I want to give you a simple framework and 2 tools. And with these tools, you'll be able to listen to any company you want to and quickly assess both the strategic focus of the company as well as assess their financial performance. And here's my guarantee to you. If you use the tool that we'll provide for you today on a consecutive basis, my recommendation is to do it at least 2. I recommend at least 2 or 3 times, and you'll start to get it. If you're part of a public company and you're listening to your own call, you'll really start to understand what's going on in your business. You'll set yourself apart, not just as a functional expert, but truly as a business expert. If you're listening to a customer and you're in the sales role, boy, what a great way to become that trusted partner. Maybe you're looking at it from a competitive landscape, or in the end, you're just interested in learning more about maybe some investments that you're making. Here's my guarantee to you. You do it 2 or 3 times consecutively, you'll get it. And what's the outcome of that? It's going to build your credibility. It'll build your career, and possibly it'll build your company. So, folks, that's where we're going as we get going today. Let me start with the 3-step process. Here we go. As we jump into the 3-step process, here it is. Prepare, analyze, and apply. For those of you that have been with us before, it's going to be very familiar, but it's great. That repetition will help you be more comfortable. By the way, if you're coming here specifically because we're talking about Amazon, again, I don't mean to be a broken record, but I can't think of a better time, because today at 2:30 p.m. Pacific time, they're going to be sharing their 3rd quarter information. So we're going to give you the Q2 information. If you want to quickly use it and see what's going on Amazon, this afternoon you'll get a chance. Now, don't worry if you can't hit it this afternoon. It gets recorded and should be available. So let me walk you through the 3 steps. Prepare, analyze, and apply. So the document that we'll make available later today is going to include the prepare, analyze, and apply process and tools. So as we talk about preparation, let me just start by kind of talking earnings call 101. A few of you have never even participated in one of these calls. Let me kind of break it down to you just a very simple way. There's basically 2 parts to an earnings call. Part 1 is what we call the prepared remarks. This is the opportunity for the executives to kind of communicate to analysts, to the market, to investors, anybody who's on. By the way, these are publicly available for anybody to jump on and listen to. And they're going to communicate their strategy. They'll talk about what went well. They'll talk about the challenges they're dealing with and how they're adapting to those challenges. And then they'll start to give a little forecast, what's coming up into the next quarter, next year, etc. It's a great way to kind of see what they're trying to communicate to the market. Well, eventually, about usually somewhere between 15 to 30 minutes, they switch, and now all of a sudden the analysts get a chance to ask these questions. Now, for you and I, they typically, most companies do not give you an opportunity. It's more analysts who are working with these large financial institutions. Their goal is to kind of critique as well as clarify what the executives are talking about. With the end in mind for them is they've got to create a report that makes a recommendation to their investors, whether to maybe buy, maybe to hold, or maybe to sell. There's other options as well, but that gives you the basics. So that's what an earnings call is. It's a chance for them to communicate what's going on, as well as analysts to kind of get some clarity. So in the prepare phase, let me suggest three things that you're going to want to do in the preparation phase. The number one thing is you got to locate the call, or if the call's already happened, you can actually access the transcript itself. So how do you do that? Let me just I'm going to jump here. I'm going to go ahead and share a different screen here. Let me kind of pull this over. And Ginger, confirm with me that you can see this. There's this great website. I don't know if you've heard of it. It's called Google. If you can do a quick search and access. Now, you'll notice I've got Amazon's Q2 earnings. I click on there, and it's going to give me the data. Now, all sorts of groups are going to try and weigh in. There's a lot of companies that provide this information. I want to get access to Amazon-specific data. So I'm looking for investor relation page. So here it is, Amazon's investor relation. I click on that. Assuming my internet connection is good, they're great about providing good information. And right here you see, here's the webcast, here's the presentation, here's the press release. Now, if I click on that, it's going to jump into the call because it's already happened. But if you wanted to listen to theirs, you can actually register by going to the same place, go to Q3, and you can actually register to listen to the call. Once the calls happen, they'll have a recording. That's what you see here, this icon here. They actually had a presentation. The presentations are great to download because they'll give you a little bit of overview of what's going on. And then I always want to look for the press release. If you want to take a note, press release is key because that's going to provide a little bit of overview, but it'll also give you the financial statements. Now, if it's a week or so after, you may also be able to access what's called their 10Q, which is their quarterly form that they fill out for the Security Exchange Commission, which will also give you some information. But in the end, I want to access, number one, the press release. I want to listen to the webinar, the webcast itself. Now, the third thing I look for is a transcript. Now, you'll notice here there's no transcript. So again, going back to that same website, instead of typing in Amazon's Q2, earnings, all I'm going to add to that is transcript. And it already guesses for me. I click on that. And some companies will actually have it on their investor relation page, but there's plenty of different third-party groups that give you access. The one I like is this one right here. It's called Seeking Alpha. If you want to jot that down, seekingalpha.com is a great one. I jump in there, and it's going to give me my transcripts. Right here, here's the Q2 information. Within about 24 hours of the call happening, it's available. And I often like to do that because I can then mark it up as I go. What's also nice with the Seeking Alpha, you'll see here's the recording. I click right there. It's going to play the recording. It's right there. It also gives me the press release and the slides, so kind of a one-stop shop. But this literally is the call transcribed. You got all the information, who spoke, what they said, etc. It's a great little resource. So with that in mind, I'll go ahead and move that back. Hopefully you should be able to see my slides. Put in the chat box if you're not seeing my slides anymore. So that's the first step. You got to locate the call itself. If it's before the call, you register for the webcast. If it's after the call, you can either listen to the recording or access a transcript. The next step we're going to look at then is going to get back to number 2, review your call notes or past calls. The same practice or the same approach to access the current quarter. If I looked on their website, I'd also have Q1. I could jump back to Q1 and see what they said then. Now, over time, if you're doing these multiple times, you'll start to have notes and you can go back. What happened the last quarter in our company call or my customer's call, et cetera. But it's a great way in preparation for that call to do a quick review. The last thing I recommend is to get with your team. I think that it's a great way for you and your team to come together. If you're a manager, bring your team. If you're an individual contributor, just get with a colleague or maybe ask your manager if you can come together and have a little event around this. But I think there's nothing better than to kind of listen together and talk about it together. If it's your own company, it's a great way to kind of think about at the end, so what can we do based upon what our executives talk about? If it's your customer, you can strategize with your colleagues around how you can approach your next call, for example. So I often recommend gathering a team or colleagues, friends, etc., to help you as you go through that. So that's the first step. 3 things. You got to locate it. You got to review your notes and then meet with your team. So the big part of what we're going to spend a majority of our time today is going to be around this analyze phase. Now, in order to do the analysis, I want to first introduce you to a simple framework. Here at Acumen Learning, we have what we call the 5-driver business model. And don't worry, if you haven't seen it before, I'll quickly do a review. By the way, all of you that have seen this before, you've been in one of our programs, help us fill it out. I'm going to ask some questions. Well, as we talk about cash, the first driver, what I'm going to suggest to you, first of all, that these 5 drivers are fundamental, whether you're a multi-billion-dollar Amazon or you're a small mom and pop shops. These are the 5 fundamental drivers every company focuses on. So we talk about cash. We all know what it is. Cash is what's required to grow and maintain a business. Now, as you think about cash, its importance, I got a statement. I want people to fill in the blank for me. So in the chat box, fill in the blank. Cash is blank. What would you say? Cash is, there you go, king, 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 king. Yeah, cash is king. Very common phrase. In business, cash is absolutely king. Not only is it king, it's our oxygen supply. What does that mean? If you run out of cash in a business, you're going to die. In fact, you can have a company that's not profitable. In fact, Amazon for many years was not profitable, but they had cash available or cash they generated. As long as they had cash, they could keep going and eventually became quite profitable, and you'll see the numbers today. So as you think about cash, there's 2 types of cash most companies look at. One is what we call cash and cash equivalent. That's the accounting term, sometimes referred to just your cash on hand, sometimes even referred to as liquidity, but it's actually how much cash are they carrying. The second metric that they often look at is how much cash they generate, what we call cash flow from operations. Now, as investors, I want that cash as far as how much they're holding. That kind of goes up and down based upon strategy. But the cash they generate quarter over quarter, year over year, I want to see a nice trend going up. And you're going to see these numbers. Amazon's cash more than doubled in Q2. So a great cash growth for them. So that's the first driver, cash. The next driver we talk about is that of profitability. And when you think about profitability, all profit is what's remained after all expenses are subtracted from revenue, or sometimes referred to as sales. Those are the same terms. As you look at profitability, there's 2 ways that employees can impact profitability of a company. One is you're going to increase something. The other is you're going to decrease something. For those that have been in our class in the chat box, what is it that we can increase that will grow our profitability? Put that in the chat box. Absolutely. Increasing my revenue or my sales is going to have a positive impact to profitability. So the second thing, what do I want to reduce? This is what we hear from executives quite a bit. What do we want to reduce? Absolutely. It's our cost or our expenses. So those are 2 levers you have to impact profitability within your role in your organization, or as you're working with your customer, help them see how to increase their profitability. Now, we talk about assets. We talk about anything you own or control which has value. And the chat box, as you think about Amazon, what is it we own or control which has value? What is Amazon own or control which has value? Put in the chat box. Data, brand, inventory, yeah, warehouses, absolutely. Customer base, cash itself, all these things, they have a lot available to them. Now, the balance is how much of that cash, for example, how much do I grow assets, hold on to them, what they call asset strength, versus how do I deploy those assets? How do I take that cash to expand my business? There's a balance between what we call asset strength, what we have, and then asset utilization, how we utilize what we have, the greater profitability cash flow for the company. Now, before I jump into growth, those first 3 drivers, you'll see the foundation of those first 3 drivers are the 3 financial statements. So as you think about the first 3 drivers, you think about cash and the statement of cash flows around cash, income statement around profit, and balance sheet around assets. Now, growth is then what investors expect, right? Investors are very focused around growth. And then who makes it happen? It's people. That's the core of the model. When we talk people, we're not just talking about external customers, those that buy or use our products or service, but also internally. How do we get better from an execution standpoint, et cetera? So that's a simple framework. That using that framework, now all of a sudden when you're listening to a call, rather than what are they trying to say, all you have to be listening to is 5 things. Are they talking about cash? Are they talking about profit? Are they talking about assets? Are they talking about growth? Or are they talking about people? All of a sudden, you can use that simple framework as a lens by which you capture their strategy as well as you capture their financial performance. So what we've got for you today is a tool that will take that 5 driver and allow you to assess the strategic focus of the company. Then we've got a second tool that's all about how to assess the financial performance of the company. So let me show you how to use this tool. Basically, using that 5 driver, the first step is you're listening to the call or you got the transcript, you're reading through it. Every time you see something about cash, you put a little slash mark. Every time you see something about profitability, you put a little slash mark. Assets, growth, and people. At the end, it's all going to be filled out, and then you get a chance to answer 4 simple questions. As you go in to do that, what's nice about the tool, you don't have to have gone through one of our programs to assess what they're talking about around cash. We give you a quick definition in the tool of what the driver is about, and then right under it, what are the trigger words? What are the language you should be looking at? That tool will be available at the end of our program today, Cindy. So it's going to be available here in just a few minutes, but I want to walk you through it first. Once you've done that, getting the number of times they talked about it, you answer these questions. The questions are simple. Which business driver seems to get the most attention? And I love the second part of that. And why? Think about the context of who they're speaking to. What's going on globally? What's going on from competition, etc. The second thing is, what are the 2 or 3 key messages or main points the executive's trying to make? Number 3, what are the goals, trends, as well as objectives as they move forward? And then finally, because it's an earnings call, what were the questions the analysts were asking? What were they focused on, et cetera? That's a great way to see. What were their questions or concerns that were raised by that analyst community? So that's the tool. Well, here's what I want to do. I want to go through their call using this tool. And so I'm going to have some parts where I want your engagement, and then I'll just kind of share what I saw. Then we'll jump into the next tool, and we'll do some wrap up, and we'll be done for today. So let's start by jumping into the call. And on the call was Bob Olszewski, I think is how you pronounce it. He's their CFO. He was the one on the call. They also had their investor relation individual as well. But basically, Brian did the majority of the talking. So here's what I want to do. Using the 5 driver framework, I'm going to go through a quote. I want you to tell me which of the 5 drivers in the chat box, which of the 5 drivers was he focusing on? So here's the first part of this statement. He starts by saying, I'd like to start by thanking and recognize the contributions of hundreds of thousands of Amazon employees and delivery partners. What driver are we talking about? Excellent. Absolutely. People, for sure. Well, the second part of it, a similar topic. And hundreds of thousands of small to medium-sized businesses who worked hard to serve our customers all around the world in uncertain times. What drivers? Yeah, people, growth could be part of that. Absolutely. Definitely people. Their partners are going to be, obviously, those that are selling their products or service on their behalf. Obviously, growth, the demand. The next quote is where you start to see some additional driver. Amazon's second quarter was another highly unusual quarter. I mentioned on our last earnings call, we began to see significant increase. The moment you see increase, hopefully a driver's coming to mind, in customer, another driver might come in, demand beginning early March. And demand remained elevated throughout Q2. So what driver? For sure, growth. Customer, you're starting to get a little bit of people as well. Absolutely. You can insinuate that if they're getting high demand, that profitability is going to increase. But so that's how you do it, folks. Pretty simple. Here's another one. You just go through it. And in the chat box, put what you're seeing. As you review this, what are you seeing? What drivers? Boy, as soon as I see that, that triggers a driver for me. This word triggers a driver for me. Wow, look at that. Excellent. Yeah, definitely a lot of growth. Profitability's in there. People with their part. Third-party units continue to represent more than half overall unit volume. How many of you knew that? Basically, their small to medium-sized businesses sell more than their retail stores. That's pretty interesting to me. I don't know that I knew that. And particularly where Amazon had to deal with COVID-19 and restructure their process. We'll talk a little bit more about that. It was their third-party groups that were able to help fulfill a lot of the demand that was out there. So pretty impressive. Not only will you see in the prepared remarks a chance to use the tool to assess what they're talking about, but even as you look at the analyst questions. So here's Mark Mahaney from Royal Bank of Canada, from RBC Royal Bank. That's a Canadian bank. Let's read through that. What do you see in there? So here's an analyst question. What is he talking about? That first one, it's kind of two questions. The first one, Brian, when you think we'll get back to in par in terms of one day being one day? How many of us are familiar with their one-day program? They moved from kind of that two-day guarantee to a one-day program in some of the metropolitan. Not in my area. I'm in small town America. I don't get the one day, but I've noticed 2 days been extended. But that was a big initiative to them. When are you going to get back to that? Well, he kind of responds and says, look, our number one priority is protecting our safety of our employees and our delivery people. Number two is making sure that we can keep up with the demand by having higher capacity. And so this kind of one day, it was a big initiative. It's still something they want to get back to, but it's not as of a higher priority. So definitely right there, you're getting some assets, kind of process stuff. In addition, you're going to hear stuff about people in there, where you're going to see your growth in different locations. Absolutely. So folks, that's how you use the executive alignment. You go through and you read the whole letter. Now in the time we don't have time to read the whole letter. So let me just kind of summarize what I kind of saw. So I did go through the whole letter, and it's going to look something like this. So when you're done, you're going to kind of mark it up, and it'll look something like this. Now, I like to kind of separate what are the prepared remarks versus what are the analyst questions. The reason I like to do it is see where they're consistent with each other, where there's a little difference. Of course, the higher ones on the prepared remarks, which, by the way, his prepared remarks were only about 15 to 20 minutes. It was relatively quick. In fact, the whole call was 39 minutes, which is considered a relatively short call. So the prepared remarks, the biggest emphasis for Brian was going to be, of course, people, the growth, and then profitability. That was his focus. If you're looking from an analyst, by far, people was number one. Assets was number one, then people, then growth. And although profit was relatively high for them, it was the fourth of the five drivers for sure. Of course, you add them all up, and you'll notice the key one. If you bring them together, which driver do they focus on more? Number one, it's going to be people, and then neck and neck is going to be growth and assets. Now, by the way, as you do this, it's not an exact science. So if you happen to go through it, your paper would probably look different than mine. But you'll definitely come up with similar things. Our numbers may be different, but the top two or three are typically going to be the same. So now that we've got that done, the second part of the tool is to ask those 4 questions. So I went ahead and went through, from my perspective, what I saw in those 4 questions. So let's answer the first one here. The first one is, which business drivers seem to get the most attention? I love that second part because why? Now, I put right next to it. After I kind of went through and drafted it, I'm like, you know what? The why is basically one thing. COVID-19, pandemic. That impacts all 3 of these drivers and what they did. So why did they talk about people? Well, hundreds of thousands of employees that you got globally dispersed, as well as small to medium business that are taking kind of some of the slack as you're trying to build out capacity. Not only that, they hired, just in Q2, 175,000 new employees. I'm not making that up, folks. 175,000 new employees just in that quarter. So people, why are they talking about people? Well, they're talking about the safety of their employees, safety of their delivery driver. They're talking about small to medium business and how they partner with them to help them meet the increased demand. Obviously, many of us, the demand factor was huge, right? They had to go in and they spent $4 billion in investing in COVID-19 related expenses. Things like changing 150 different processes to allow for social distancing, to make sure they had the equipment, the masks, the gloves, et cetera, to protect their employees. That's why people was there. And of course, from an external customer, it's all about demand and how our demand skyrocketed. Groceries, for example, tripled. Demand for groceries tripled their growth rate in Q2. So that's why they're talking about people. Why about growth? Well, it's a lot of what, again, back to the pandemic. Revenue and operating income significantly exceeded. In fact, this is an interesting stat that I found. They generated just over $88 billion in revenue in Q2. Guess how much they generated the year prior? Q4, which is their biggest, that's their peak time of year, obviously with the holidays. they generated about $1.5 billion more in Q2, one of their slowest quarters, compared to what they did in Q4 of last year. So talk about growth. It's off the charts growth. Heightened demand, of course, is a big, the headcount increasing. AWS grew as well, and as well, AWS became a more viable option for many customers because it allows them to create that expense more as a variable cost versus a fixed cost. So growth was a big focus, obviously, because of COVID-19. And then the last one was neck and neck with growth would be in assets. 150 different processes they had to change, trying to meet the demand by increasing capacity. Typically what they do is they kind of slow down their capacity in Q1 and Q2, start to ramp it up in Q3 to get ready for Q4. Well, basically all the capacity that they usually use in Q4, they immediately brought it back online and basically used all that capacity, and they need more. Q3 will be interesting today to listen to see what they did from capacity expansion, because that was a big deal for them, is they need to get more capacity is what they're looking for. So a lot of conversations around that. $9.5 billion spent to expand their capacity and be able to meet the demands that they see. Interesting enough, this growth is not just a pandemic issue. Of the 175,000 employees they hired in Q2, they're anticipating that 125,000 of them will move into full-time jobs. What they're saying is that growth is going to continue for many months in the future. So that's what they focused on: people, growth, and assets. Why? Overarching, because of the pandemic. Well, the next question is, what were the 2 or 3 main points the executive was trying to make? Now, he never came to, here's my top 3 messages. Sometimes executives will do that. But the 3 things that really stood out to me are these 3 things. Number one, the first thing was this number 1 priority of keeping employees and partners safe during this unprecedented time. Multiple times, both David and Brian communicated that, but analysts even asked questions. When they asked about when are we going to get back to one day really being one day, or when is 2 days really going to be 2 days, that was another comment that was asked. Consistent message, on-point message. Our number 1 priority is the safety of our employees and our partners. Number 2 for them priority is going to be their capacity, how to meet the capacity demands as they move forward. So that was a huge emphasis for them. Number 2, heightened demand has caused us to adapt and accelerate our growth. Things that they were anticipating wouldn't be on target till end of 2021 or even into 2022. They've accelerated. They brought them forward because of this growth. So that's been a huge thing. So the key message is, look, heightened demand has caused us to adapt and accelerate our growth. But guess what? We were able to adapt while keeping our employees safe. The message, look, hey, yeah, we were able to adapt. Yeah, there was a little short-term kind of delay on stuff, but we're back up and things are running quite well. We've added capacity and we should be able to meet that. Number 3, I think for me, a key message was the value of their third-party units. Think about that. You're got all these distribution centers as Amazon, and all of a sudden this COVID hits and you have to shut things down. Well, the third-party groups were able to sustain many of our demand while they were trying to fix their processes, et cetera. So that the third key message I found was that third-party units continue to represent more than half of our volume. We are more committed than ever to supporting the success of hundreds of thousands of small to medium businesses to sell their products in Amazon stores. So really this kind of thing like, hey, we had a tough time and man, how much we appreciate. We are fully on board to help those groups. Great messages as they move forward. Next one is what were the goals and trends and objectives going forward? What do they see kind of moving forward? We'll continue to put safety as a number 1 priority. They expect to spend at least $2 billion more on COVID-related expenses to continue to build out the infrastructure, the process, et cetera, to allow safe employment. Costs are expected to be lower in Q3 due to better and cost efficiencies at higher demands. So basically, they've kind of right-sized the ship. They'll get costs should be a little bit lower. For example, one of the biggest one was on their shipping. They had some issues around shipping initially in Q2 that they've worked through now that they're getting more kind of efficiencies from. New fulfillment capacity will come online in Q3, so they're expanding that. That new capacity will impact some of that profitability headwinds as we prepare for Q4. And then lastly, peak demand has accelerated growth plans. As far as Q3, this will be a number to check. They're anticipating their forecast was going to be about 88 billion to 92 billion in Q3 of this year. So it'll be a better quarter than they've ever had. Then in addition to that, their net income, they're anticipating somewhere between about 2 to 4 billion. So they're going to eat up some of their profitability with the 2 billion they have to pay out for a COVID expense, but the ramp up for their peak quarter. Yeah, a lot of masks and sanitizers, $2 billion. It's not only that, it's the equipment they shift around. It's quite an event is what they try and do. And yeah, Jenny, it is a jigsaw puzzle. Imagine the distribution system. You're trying to continue to meet high demand while trying to create safe environment. I can't imagine the challenge that they're going through. So last question on the tool is this. What key questions or concerns were raised by the analyst community? Again, the overarching, if you just put it into one, it's COVID impact to Amazon business. And here's some of the highlights, what they asked. One was, when is the balance between essentials and non-essential products? You may remember as they were into Q2 and they were doing this earnings call, they had made a shift where they said, look, we've got both essential products, masks, cleaners, essential things that we all need, toilet paper, et cetera, right? But I also have non-essential products that people might buy. Well, their capacity was constrained, and so they limited how much non-essential would come into their warehouses, forcing to the small to medium businesses to hold on to the inventory versus them having to go, and they jumped up their non-essentials. So the question was, are we shifting back? When are we going to get back to that balance? In Q3, they should be back to that balance based upon what they said in Q2. The international expansion, they had a lot of international plans, a lot of growth opportunities, but because of the pandemic's impact. So where are you going internationally? What are you trying to do? The shipping, get back to normalcy around shipping was another one. What about Kpis? You're going to have a lot more cash because you're generating more profit in Q2 and now in Q3. What is that cash going to be used for? Where are you going to deploy that, et cetera, was a big part of their focus. So a lot of like, hey, you've had a great quarter, but what are you going to do about it? And how do you continue to maintain your strategy during a global pandemic? Well, folks, that's how you do it. It's quick. Once you've done the 5 drivers, you just kind of walk through and say, okay, so which are the 5 drivers they focus on? What are the 2 or 3 key messages? What are their goals and objectives moving forward? And then what are analysts trying to ask? In the end, it's going to look something like this, all filled out. You got what they talked about on the left-hand side, and then your answers for those questions. Now, at this point, you've got a lot of data. So the question is, what do you do with it? Where do you go next? Well, next thing I like to do is jump into the financials, see what happened from a financial perspective. And so we've got a tool in the workbook that we're going to give you. It's called the Navigating the Financial tool. I love this tool because it brings the 5 drivers as well as the key metrics and statements all into one place. Now, you don't have to have gone through one of our programs where we do a deep dive on how to listen to or look at these financial statements. This tool can help you kind of walk through it. On the left-hand side, you'll notice you got the 5 drivers right here: cash, profit, assets, growth, and people. Right next to that, you have some of the key metrics that companies look at. Now, the tool that I've got here is a generic tool. It has the more common key metrics and measures. As you start to listen to calls, you'll see that they may have a key metric they look at beyond what you see here. For example, Amazon looks at operating income as a key metric for them. So that would be one you could add if you want. But this is the basic key metrics that companies look at. Well, no, the brilliance of this, in my opinion, by the way, I did not develop this, so I'm not bragging, but the brilliance is this section right here. Rather than you have to memorize, first, what the key metrics are, second, how do you access them, or even third, how do you calculate them? It's right here. First, the statements. Rather than you have to know where to go find their cash position or cash equivalent, all I have to do is I go to the balance sheet and I can access it. Now, if there's some sort of calculation, you're going to see it here. But for cash and cash equivalent, there's no calculation, so you just put the number in. Versus down here, as we get to net profit margin, there's a calculation we've got to look at. So with this tool and a company's financial statements, in about 8 to 10 minutes, you can quickly assess their financial performance. It runs fairly quickly. So that's what I want to do. I want to walk through. I want to do a few of these together to give you a chance to kind of use this. And we'll just use the chat box as we go through it. Now, don't worry, you don't have the financials, but I'll show them. So let's start with this first one. I want to get that cash and cash equivalent, also known as the cash on hand, sometimes referred to the cash position. Just looking at my sheet, where do I have to go to find that number? Put it in the chat box. Absolutely. I'm going to go to that balance sheet. So here it is. I'll give you the balance sheet so everybody can see it. Here's the balance sheet. Now, as you look at the balance sheet, if you've gone to our class, You got the asset section at the top. It's broken up by assets. Here's my liabilities. And then eventually we get down into equity. Excuse me, my liabilities are up here. I kind of got it carried away with my pen. So my cash is an asset. I'm looking for the line item called cash and cash equivalent. And I want to look at the right date. I'm looking for 2020, right? This is at the end of the year. How much cash were they carrying versus how much were they carrying at the end of the quarter? So in the chat box, just put how much cash did Amazon have on hand at the end of Q2 2020? Just put in the chat box. Excellent. There you go. So it's this 37,466. Now, for some of you who've taken our class, when companies have plenty of cash on hand, rather than just sitting it in a cash and cash equivalent, which either is cash or converts to cash in 90 days, they often will take some of that cash and put it in short-term investments. That's what this is right here. So if Amazon was going to talk about their cash position, they would add this number as well. But since on my document, all I'm looking at is how much cash and cash equivalent, you are correct. It's the 37,466. But know that this also is potential liquidity for them. Basically, this is short-term investments that will convert back to cash with greater than 90 days, but less than a year period of time. So as you look at cash, they've got plenty of cash on hand. Just go back to that document again, cash and cash equivalent, 37,466. You guys got it right, absolutely. And Eric, thank you. Yes, it is in millions. This is not $37,466. This is $37,466 million of cash. Okay. Now, because we're looking at the quarterly results, on the cash flows on the balance sheet, that's what we call a snapshot in time, meaning they looked as of June 30th, how much cash we were carrying, they put the number here. But Amazon gives us some quarterly numbers around cash flow. They broke it up by cash flow. So again, let's go to the next one. We want to get their cash flow. Yes, plenty of cash, Troy. Their cash from operations, what we want to look at, also referred to as their cash flow. I'm going to look at what statement, put in the chat box, just to make sure we're comfortable using it. What statement do I have to go to find their cash they generated, also known as their cash flow from operations? Excellent. Great job. So let's go ahead and jump to that statement. Here it is. Now, when you're looking at this statement, you have kind of three sections. You got your cash from operations that leads into cash from investing, that leads into cash from financing. If you come to our class or do our online training, you'll get more clarity around here. But the line item I'm looking for is going to be that net cash provided by operating activities. It's this number here. And this is broken up just by quarter. So it's telling me how much did they generate in one quarter. Guys, put in the chat box, how much did they generate in Q2? Just Q2 by itself. Holy cow. Yeah, Mike's making fun of the first quarter. Only 900. By the way, 9 billion is a significant cash generation. Look at your company. There's not very many companies that are generating in a quarter $9 billion. So that's huge by itself. But look at Q2 of this year, over $20 billion of cash. That's huge. And you can see how much they did in Q1. All you have to do is take this number here. Well, actually take this number, subtract our quarterly numbers. They did about $3 billion in Q1 is all they did in Q1 of this year. So guys, it really speaks to, so not only do they have 37 billion on hand, 33 billion in those short-term securities that they can get access within, less than a year's period of time, but they also generated $20 billion of cash. Now, we said they spent $4 billion on COVID-related expenses, so they're spending a lot of cash as well. But that's how much they generate. So we're going back to the tool, put it right in there, boom, there it is, 20,606. Guys, there's not very many publicly traded companies that in a year generate 20,606. That is a significant number on just a quarterly basis. Now, if you look at an annual basis, it's going to be even bigger. So that gets us to that. Let's go to the next one. We've got our profitability. So now we're jumping in our profit driver. We'll look at that total revenue. The statement I'm going to go to one more time in the chat box. Yeah, CVS Health, Jeffrey's saying, is about 12 billion in cash. Was that annualized, Jeff, or was that for half year or something like that? Put it in the chat box. Yeah, absolutely. So we're going to go to that income statement. So jump to that income statement again. It's revenue minus expenses. Now we call it sales here. So we got our sales up here, right? We got both sales of our products as well as sales of service. This is the line item, total sales, what we're looking for, right? Now, we got on a quarterly basis because that's what we're looking at now. So I want to look at the quarterly numbers, and I'm looking at 2020. In the chat box, how much revenue did they generate in Q2 of 2020 alone? Yeah, guys, 88 billion, 91. If this sounds like a broken record, can you believe that? That is more than they generated Q4 of 2019, their peak season for them. That shows you how much this COVID-19, think about it, man, all of a sudden you need to access this products and you can't go to your local grocery store because it's been shut down. All of us were online trying to access, or as masks become unavailable, they skyrocketed in cost, man. It was incredible what was going on. That's what happened in Q2 for them, that 88 billion 922. Well, since we're here, let's go ahead and get the second number, and I'll jump to that. We're going to do the next number is our net income. Again, it's going to be on the balance sheet. So going back to the tool right here, I got to go, not the balance sheet, the income statement is where I'm going to go. Go to my net income, back to that income statement. How much net income did they generate in Q2? We just want the Q2 number, net income, put it in my chat box. I'm looking for a net income number somewhere down here. There you go, $5.2 billion they generated in Q2. So now I plug that in. That gives me, I got the top four. Well, now we're to our first calculation. But guess what? These two line items, I don't have to go back to the statements because these two line items is how I calculate that. So I got to get my net income number from here. I pull that in. There's the number. I then got to get my revenue number, bring that in. Here's the number. Okay, I'm only going to have you do one calculation just because interest of time, but grab your calculators. Let's see if we can get that. You'll see the calculation in the tool. I'm going to take the 5243. I'm going to divide that by 88912. Then either just move it 2 decimal points or just multiply it by 100. When I multiply it by 100, put in the chat box, what did you get? There you go, about 5.9. You may have rounded up to 6. That's fine. Absolutely. So what does that tell me? That says for every $100 I brought into my company, I generated $5.90 of profitability from my operations. That's a key metric for us, right? For when it's all said and done, for every $100 I brought into Amazon, I generated $5.90. Now, of course, you'd want to say, so how does that compare to other quarters? That is significant. It's about 4%, 3%, as low as 1%, 1.5%, 2%. But this is definitely an accelerated number, and we'll look at the annualized numbers here in just a moment, kind of year-to-date numbers in just a moment. Well, folks, that's called the Navigating the Financial tool. We're not going to go through all of them. You do the same thing. If you want to get your equity position, you go on the balance sheet, get access to total equity, divide by total assets, etc. It's going to give you access to that. In the end, I went through and I did it. So I did it on a quarter-over-quarter comparison. So here I've got Q2 numbers of 2019 versus Q2 numbers of 2020 versus Q2 numbers of 2019. Cash position, about the same, not a big change, but look at that change in cash generation quarter over quarter, huge. Look at the growth here around revenue. If I want to see that growth number, it's up 40% year over year. We talked about that profitability number, and last year we had a good profit, about 4.1%, but again, quite a bit accelerated year over year. So you can use this tool, and the comparison could be quarter over quarter. I look at Q2 versus Q2. Or if you're doing it later today or tomorrow on their Q3, you can do Q3 2020 versus Q3 2019. You can also do it for the 6 months. So just look at these numbers quickly. Here it is for the first 6 months of the year. So half year, again, the top numbers stay the same because that's a point in time. But here's where you can see cash generation. You look at revenue numbers, not quite a 40% growth. We're now down to 35% growth. Our net income margin is 4.7. So Q2 was really an accelerated net income margin, or a higher end net margin. But if you bring it with Q1, it kind of gets flat. Of course, remember, they spent $4 billion with expenses in Q2, and then Q1, other expenses they would have had. Here's what you're seeing from a net income growth perspective, as well as an earnings per share growth. So you can use it looking at kind of year-to-date numbers. I'm just going to quickly show you 2 other ways you can do it. One is look at it from a competition. Now, Walmart and Amazon, you may or may not think of them as competition, but Walmart is not afraid of a lot of companies. I wouldn't say they're afraid. But if you see what they're doing, their business strategy, it's definitely to compete with Amazon. You look at the revenue numbers, Walmart a lot more than Amazon. Look at that cash flow number, though. How much cash Amazon generated versus how much Walmart generated. You look at growth in revenue here. Well, not much growth in revenue at Walmart, right? Because Walmart, their big infrastructure with kind of brick and mortar, it's going to have a different impact, can impact their margins, et cetera. But absolutely, Walmart and Amazon going head to head in Q2, Amazon really saw a significant increase in demand of their services and took some of that from Walmart for sure. The other way you can look at it is just look at any company. And for those of you who were with us last month, we looked at Tesla last month. As you look at Tesla in comparison number-wise, obviously different industries, so very different. You know, you look at kind of cash positions between the two, how much revenue, significantly more. But of course, it's a different industry. You look at kind of, margins, very small margins here and pretty okay margins, kind of just below average margins there. But in the end, you can use this tool to look at quarter over quarter, year over year comparisons. You can look at it from competition. You can look at it from a customer base, or you can look at it just in general, any company to kind of see. Well, folks, that is how you do the analysis. So we've gotten through the analysis part. We've looked at their numbers, and obviously huge growth numbers on revenue, top line revenue growing 40%, annualized for the first 6 months, about 33%. Cash flow is growing dramatically. Now you got all this information. What are you going to do about it? This is the last step. It's apply. You got to do something with it. There's a quote that says, "To know and not to do is not to know." Now, maybe your mom's told you that. Hey, I told you a million times. How come you're not doing it, right? But in the end, if you take this information, you do the analysis, you don't do anything, you kind of wasted your time. So the last page of the document we're going to give you is the apply phase. What do you do there? There's basically 3 approaches on the apply phase. Number 1 is you're going to ask yourself, what are the new insights did you gain? What new insights did you gain as a result of this analysis? And as I went through that, there's 4 things that stood out to me. During COVID, Amazon has had tremendous growth. Q2, which is their lightest quarter, outperformed, was a huge quarter for them. Over 50% of retail revenue at Amazon comes from small to medium businesses. I didn't know that. I didn't know it was that big. I knew they had that, but I knew it was that big. It is the lifeblood of their retail business right now. Hiring 175,000 employees, guys, that is a large corporation. Just 100, even 100,000 is huge. Because of growth, we'll keep 125. So they're seeing this isn't just a short term, it's a long term play. More than 1 million employees with Amazon and its partners. That was a huge insight to me. I didn't realize. And all the dynamics of dealing with COVID-19 with that large of a workforce. And then that last point, challenges of high demand to their infrastructure, including including capacity, including process, workforce, just all the things that come into play. Again, for some of us, the company slowed down and you're able to right size. But imagine you're dealing with the pandemic issues on top of rapid growth, how challenging that can be. So those are some of the key insights. So the next step is once you gather those key insights, what are you going to do about it? I like to list 3 things based upon what I learned. What am I going to do? Now, for me, I don't work for Amazon. So for me, there's 3 things that stood out. Number 1, I want to see what happened in Q3. This intrigued me enough to say, look, they're saying Q3 is going to be even better. I want to see what happened. So I want to review that. And by the way, it's today at 2:30. Jump to their website. You can jump on, or tomorrow you can get the recording if you want. That's what I'm going to do, see what happened. Number 2, I want to take this data. I'm in a training company. And obviously, Amazon's a big demand company. In fact, at the end of today, there was a feedback form where I'm going to ask you, who should we look at next quarter? Or excuse me, next month. And my interest is to get that information. The reason we did Amazon is because people said they wanted Amazon. So Amazon's one that comes up quite a bit. I want to have that data incorporated in our training program so people understand different industries and how they're handling the pandemic, et cetera. And then obviously share that information with my clients and my colleagues and employees. The last step is once you capture, you know what you're going to do is to have a conversation. That's the last part of our tool. If you've analyzed your company, you set the stage for a conversation with your manager. Sit down with your manager, say, here's what I heard, and here's the things I think I could do to help us from a strategic perspective. Imagine what that can do for your credibility, your career, as well as your company, if you're looking at your own company stuff. If you're maybe in a sales role or interested in kind of our customer base, and you've looked at one of our customers, again, maybe you meet with the sales manager, the sales team, and talk about how we can strategize based upon what our customers needs and become that trusted partner. Or if you look at a competitor benchmark, it might be, again, going back to your manager, how can we differentiate ourselves in the market, et cetera. But guys, that's the last step. Once you gather that, what are you going to do? Go have that conversation. It'll solidify what you're going to do, but it also helps build your credibility, build your career, and build your company. Folks, that is the process. Prepare, analyze, and apply. Well, let me jump to, you'll remember in the prepare stage, just by way of a reminder, there was a second step. I got a poll question. See if you heard me earlier today. There's one step missing here in that prepare stage. Look, you're supposed to locate the call. What was that number 2? Was it to phone a friend? Was it to review call notes? Was it to get a root canal? Or was it to skip to step 3? What was the answer? Do you remember? What's that second step? It connects with the tool that we just walked through. What is that second step? And it looks like some of you put it in that session. But in the prepare phase, you've got to locate the call. You also got to, I'm going to go ahead and close it and share the results with you. And those that answered, you're correct. It is to review past calls, right? Well, the reviewing that past calls, what is that? Well, that's going to be right here, right? It's going to be this tool that we just did. What you filled out now becomes that second step of your prepared phase. You review that. Now you've got this. By the way, you've already reviewed it today. So now when you listen to Q3, if you choose to do that with Amazon, it's fresh in your mind. You can see what happened. Did they really grow? Did they outperform Q2 like they said they would, et cetera? Those are all great ways to do that. Well, folks, with that in mind, here's my challenge to you. You've come to this program. You want to get better. That's why you signed up. My question for you is, who are you going to analyze? Who are you going to analyze? I'm going to put that as a poll question, my last poll question to today. Who are you going to analyze? It's open now. Are you going to analyze the company you work for? Are you going to analyze the company you sell to, compete against, partner with, invest in, or interested in? Guys, if you come to this program, you say, hey, thanks, Brent. That was great, very helpful. And you don't do anything with this, this is not the end all. This is the beginning of your ability to get more comfortable around these calls. So my recommendation is to make sure you go back and pick a company and do it. And my recommendation is to do it within the next week's time max. That will take the learning you've had here and you'll really get some benefit by doing that. So as we look at who's doing what, as I look at your responses here, looks like 22% of you are going to do your own company. Some of you are doing the companies you sell into, partner with, etc. A number of you didn't answer. Maybe you didn't take the time, but please take the time to do this. Well, so in order to do that, what do you have to get access to? Well, here it is. I got to make sure you get access to the workbook. So I'm going to give you one link that's going to give you access to the workbook. It's also going to give you access to 2 additional things. Number 1 is I want to give you access to a special offer we have. For any of you who are new to us and you want to build your business acumen, you want to get better at this, have a deeper dive around these calls, not just listen to earnings calls, but be able to do that. Or maybe you're an old client and it's been years since you've taken, you want a little refresher. We have created an online, seeing the big picture training program that's getting a lot of feedback, a lot of positive feedback from our clients. And so what we want to provide is a special offer for you. If you want to do that, I'm going to give you a link that will give you all the information. And you can sign up. It's usually $295. It covers all the 5 drivers and the financial statements. There's 13 different modules. It's about 6 hours of content. But it'll give you great exposure to that. Want to make that available to you. And then the last thing is I need your feedback. I need to hear from you what you thought of this program. And most important, I want to hear who should we look at next quarter. So speaking of next quarter, our next quarter one's going to happen on November 12th. That's why I need that feedback. Now, if you're new to us, you're not familiar with Acumen Learning, we provide business and financial acumen for many companies. We work with 30 of the Fortune 50. If you have interest in what we do live sessions, we do earnings calls, we do virtual sessions, as well as our online program. If you want to learn more about us, in that feedback form, there's a place for you to request additional information. One of our salespeople will give you access to that. Well, folks, that's a lot of me talking. So let me just end by giving you the link. Here's the link. Put in the chat box or go ahead and put this in your link, acumenlearning.com/1020. Click on that, and that's going to give you the link to all three of those, the tool, the special offer, and your feedback. And please do that. As we said, once you've done that, you're free to go. My colleagues and I will stay on the call. So if you have any additional questions you want to ask, we're happy to try and respond to those. I know a few of you had some questions already. I'm going to go ahead and grab that link and make sure I put that in the box so everybody has that. I want to make sure you get there for sure. So let me go ahead and go to that chat box, put it in there. Here is the link. Should be a hyperlink now. If you click on that, that's going to give you access to everything. There it is. Give you a few times as that scrolls up. Okay, let's see here. Can the links be, let's see. Can the links be forwarded up to the attendee by mail? Yes, so anybody who's attended, we're going to give you a recording of this, I believe, and we'll also give you those links there as well. So you should get an email from us that incorporates that as well to answer that question. Thank you, great question. What other questions do we have? Final KPIs. I don't know if you're asking as far as that tool, the financial metrics, or specific to Amazon. Amazon's KPIs are going to be very similar to those metrics. The only additional one is their profitability. They look at operating profit as a key metric for them. They have some more operational metrics. For example, basket size is a key metric they look at. They look at retention around Prime members and their retention rates and growth rates of Prime members is another big one. But as far as financial metrics, the key ones are what you're going to see in that NTF with the addition of their operating income metric. Let me know if that answers your question. Eric, yes, if your team can add value, beneficial, yes, this workbook for sure, you can use it with your team. And then invite them to the next call on November 12th. Will be a great chance to walk through another company and get practice using it. But yes, you can use that with your teams. Chad's asking about a subscribe section. I don't know if anybody's answered. Oh, I know one thing, Chad, is if you fill out the feedback form, it'll put you in the list. There's a place for you that says sign me up for the next one. And I believe, correct me if I'm wrong, Brooklyn or Mike, do they have to continue to put it in, or once they're in, they'll always get the invites? Let's answer that question for him. Let's see, other questions. Mike, any of our team that there was questions that I may have missed. I know you said we'll answer questions later. Are there any questions that we missed that we should try and respond to? I can scroll up into the chat box. The links before. Let's see here. Again, I'm going to put that link in the bottom. I still see a number of us that are still on. Here's the link. It's going to give you access to the tool, access to the feedback form where you can tell us who you think we should look at next, and then that special offers there as well if you want to do more personal development, etc. Sure. So I think what you're asking is share kind of this maybe. I don't know if you want the quarterly numbers or the annual, the 6-month numbers. Here's the quarterly if you want to take a screenshot of that. Let me know when you're done, Franco. And then I also have the first 6 months numbers if you want to try and compare. Okay, here's the one for the first 6 months if you want that. Happy to give you, you know, the one with Walmart comparison if you want that as well. I can give you that, as well as the Tesla. You just let me know if you want those as well. Acumen Learning Team, are there any questions that I missed? I know there's so many and it would go so fast. I'm sure I missed questions. Is there anything we should be answering that I'm missing? Oh, so Mike's also saying if you send an email to info@Acumen Learning, they'll send you the workbook as well, or you can go to the link as well. Oh yes, Franco, I'll do Tesla. Here's Tesla, here's Tesla as well. And actually, I could have taken those writings off. If you want a cleaner, let me know and I'll take the writings off. my annotation. So yes, we'll be sending an email to the recording for all participants. If you have colleagues that registered, invite them to the next one. Obviously, people get busy and they may miss. Great to have you, Mark. Thank you. I don't, Franco. I don't have those currently calculated. Some of those international comparable companies. Is it Baba or is it Abba? I always forget, and then Melly as well. I don't have those numbers calculated. Obviously, the tool, you should be able to access that information. It may be in different currencies, so you'll have to think through that. But the tool, you should be able to help that. Yeah, the question around how should we think about earnings per share growth and net income growth? Well, earnings per share growth and net income growth, they often they're very similar. As you deal with, you got to think about the calculation. So earnings per share is just net income divided by how many shares they have outstanding. So as net income goes up, assuming your share count remains the same, it's going to trend very similar. And we saw that in the quarterly numbers. But then if you change the share count, if, for example, I do another issuance, I issue additional shares, or I buy back shares, that then starts to change the denominator, which then can cause them not to trend the same way. So in a case, if you see them trending very similar, most often, and they're just trending by net income, assuming the share count remains the same. But then we go out and we buy a bunch of shares out, and you see a growth in net income plus a reduction of shares, you're going to see a faster rate of growth on earnings per share than you would on just the net income growth. Let me know if that answers your question. Joseph, great to have you. Oh, excellent. Elsevier, great. Well, that's been a while, but great to have you. Absolutely. The question, let's see, who was that? Mark asking, do you leverage annual reports and messaging from CEO and president? Absolutely. This is just looking at it from an earnings call, but you could do the same thing on an annual report. Obviously, they got a letter from a CEO to shareholders. That's a great way to use the executive alignment tool. Of course, annualized numbers are great to have to kind of see what's their typical trends, because you do have seasonality in companies. And so, yeah, absolutely. We'll do this. So as a company with our clients, we'll do a quarterly, but we also do the annual where we do a deeper dive, looking at their quarterly. With our courses as well, we'll often bring the letter from the CEO. But this tool is a great tool. It's not just earnings call. You can use it for the annual report. Just go listen, read their call, or excuse me, read the shareholder letter, and then go to the financials on an annual basis, and you can use this tool. So it's not just an earnings call tool. It's something you can do as you're using the annual report as well. Let me know, Mark, if that answers your question. Joseph, excellent suggestion. Boeing, here's something, if you don't mind, if you jump to that link that we put in there, just put that in the feedback form. Just put Boeing, because that's where it populates, and then we see kind of the top 2 or 3, and then we pick them based upon when they have their information available, et cetera. But if you don't mind, if you haven't already, put it in the feedback form, and that way we'll make sure we'll get it. How do you invest your money? I put my money in and let it sit. My disclaimer is don't take any of my communication around Amazon as a recommendation or a deterrent from your investment portfolio. I am not a financial, that's my disclaimer. I am not a financial planner. I don't want anybody calling me up saying that was a bad move. But anyways, I tend to be, Mark, I'm not a day trader at any means. It's kind of long and let it sit. That's kind of follow what a Warren Buffett, right? Put it in and let it sit. Let's see here. That's great. Usually look at the deep dive in the back regards to risk. Absolutely, Mark. The categories of the annual report I like to look at. If it's a new company I don't know as well, I'll do item 1, which is the business section. I'll get a nice review. And if you're not as familiar with Amazon, it's kind of cool. They break it up into 3 sections. North America. So they start geography, and then they do products. So it starts with geography. So it's North America, international. But then their third category they report is AWS. So they kind of have it broken up that way. If I already know the company, I don't spend much time, but I absolutely will look at risk factors. Great. For example, if you're selling into a company, looking at risk factors can really help you understand how your product can prevent some of their risks. If they have a certain risk around safety, for example, and you got safety equipment, you'll be able to describe how it helps prevent some of those things. So risk is one you can look at, but I for sure look at the financials, item 8, and then what's called item 7, management discussion analysis. That's hugely beneficial. It's where the executives go through. It's actually kind of a nice place for a quick review of the business section. Usually they have a few pages on their business, but then it starts, usually it titles something like results from operation or operating results. Then they kind of go line by line through the income statement, what happened, why it happened, et cetera. So it really gives you that deep dive. So those are the sections I often look at. Definitely item 8 with the statements, item 7, management discussion analysis, sometimes the risk, and then the other section, sometimes item 1, which is business section. Excellent, Joseph. Thank you for filling out that feedback form. That will be great, and we'll add that to our list. Morningstar, when you say same factors, you're talking to Joseph's question here. Morningstar utilized same factors in their analysis. Are you talking about like the 5 driver factors, or the same metrics and stuff? If you're talking same metrics, yes. Morningstar, Seeking Alpha, even, there's a lot of them out there. I can't remember all of them. What's the one that's got a unique name? I want to say Mojo or something like that. Anybody remember? Oh, Fool. Thank you, Mike. A Motley Fool, I think is what they call it, right? So as far as metrics and measures, yes, you'll get all that same data. If you're talking about like our 5 driver metrics, no, none of them kind of drive around that 5 driver. That's kind of a proprietary to Acumen Learning. But yeah, as far as getting access to data and information, Morningstar provides it. Motley Fool provides it. Seeking Alpha provides it. Those are great resources, other than just going to the company's website. Well, folks, let me see here. From our Acumen Learning team, if there's any questions I missed, maybe just copy and put them in the chat box so I know. I'm also just looking at our participant count to see where we're at. How many are still here? Happy to stay long, folks. If you have additional questions, looks like we've got only about 71 left. If not, I'm going to go ahead and put let's see, is the last page from the apply section not in the workbook? No, the last page is in there. And I assume if you mean this page right here, that should be in there, if that's what you're meaning, Lisa. This should be in there. Are you not seeing it in there? Oh, so the file you downloaded has taken that out. Mike or Brooklyn, we may have for some reason, it may have cut off a page or something. Brooklyn said, keep scrolling to the last page. So I don't know if that, sometimes depending upon your reader, it may be scroll sideways or maybe scrolling up or down. So Bibby's saying they're seeing it. David, great to have you. Thank you very much. Or here it is as well. We just put in the chat box. If for some reason you're missing that last page, Lisa, you might download this one and if for some reason, I don't know, maybe during the download it cut it out somehow. I don't know. So I'm going to put that link one more time. This is a link to all the resources, tools, as well as kind of feedback and a special offer. Go ahead and click on that. Folks, we're dropping down in numbers. If there's additional questions, happy to stay on. If not, go ahead and just exit the meeting. That's how we know we can kind of wrap this up. Thank you again for your time. It's truly been a pleasure. On behalf of Acumen Learning, continue to engage around listening to these earnings calls. It's a great way to build your credibility, your career, and your company. Well, Lisa, if you're still having a problem, those links that were put in by Acumen Training 1, there's 2 different options to get to that file as well. So if you're having a hard time, try and click on one of those, see if it gives you the full. I want to make sure you get the full document. Oh, thank you, Lisa. Okay, folks, we've got a few of you still on. Again, we're going to be shutting this down if we don't get any additional questions here in the next little bit. Thank you for coming and joining us, and we'll continue to do this as long as there's interest. It's a great way, even if you've done it before, to come back. You'll learn a little bit more about industries, plus it reminds you about how to use the tool. So it's a great continued learning opportunity. If you're done, just make sure you exit out of WebEx, and that will let us know. We can go ahead and close out the meeting. We'll probably let's give another 2 minutes or so. If I don't have any questions, we'll just shut it down. But again, if you do have questions, go and jump in the chat box. If you're still on, you can hear me. There's the link to the downloads. If you haven't gotten that, I'll put it again in the chat box one last time. Make sure everybody has that. Again, that will give you the earnings call workbook. It'll also give you the feedback where you can give us feedback on this program, but also make recommendations for our next call, who we should look at. It also has a place if you want additional information about Acumen Learning. You can click on that as well. The last thing that's a part of that link is a link to our Seeing the Big Picture Business Acumen training, self-paced online training program. It's a great course, very dynamic, very engaging. But if you want a deeper dive or a little refresher, it's a great resource. We're giving you a discount. It's normally $295. We're giving you $100 off, so it'll be $195. If you want to take that as a refresher or get some exposure to business and financial acumen, it's a great resource. Folks, with that being said, our next call is going to be November 12th. Love to have you on. Feel free to invite any of your colleagues, peers, direct reports, friends, family, etc. That's a great way for people to continue to build their understanding of business. With that being said, I don't see any additional questions. We're going to go ahead and wrap up today. Thank you much for your time and engagement. We'll see you in a couple weeks, actually, just a couple weeks this month because of Thanksgiving, November 12th. Thank you very much. We're going to go ahead and shut it down.